Hello and welcome to another episode of InsurTech Business Series. We're excited to be coming to you today, and I hope you're doing fine. I hope your week has started great. So my name is Damola Oloko, and as usual, I'm joined by
Folumi. You're welcome to our podcast today. It's nice having you listen to our conversations. We hope that you enjoy today's episode, as it's entirely different from what we've been doing. We decide to bring in young veterans in the industry to have discussions around certain events in the industry. Some of the trending topics in the industry. It's really an interesting one because here you can see how, the not Gen Z per se, millennials actually decide the way they perceive the industry and what exactly they want out of the industry, which I think it's a good thing. Not that we're just having conversations with, people that are experienced or that have spent years in the industry. We also need a fresh perspective from people that are upcoming in the industry.
I like the fact that we're having this conversation with these people because, the future of the nation or even this industry is in the hands of the millennials, even the Gen Z. So hearing from their own perspective is quite important. Both of us are millennials, right? So, it's been quite interesting hearing from the more experienced heads, like you said. But looking at it from another, a fresh pair of eyes is quite good. So we can hear what they have to say and see how we can adjust. So it's going to be quite interesting, and we look forward to that conversation. So we'll join that after the short break.
Exactly. All right, so thank you guys for agreeing to join in. It's wonderful having you guys on our podcast. So we can discuss, some of the insurance happenings, and there's no better persons that we could have contacted other than the two of you. So thank you very much. All right, can you guys give us a brief introduction of yourself? I will start with Oluwaseun. Then we can move on to our other panelist, Abdullahi Adekanbi.
Like you mentioned, my name is Oluwaseun and Ogundolie. I've been in the insurance industry for about 4 years now. I work in life technical.
Okay.
Do purely underwriting and risk management, especially for life-based risk. I'm a student member of CIN also.
Oh, nice.
And I also have very keen interest in human resources.
Okay, that's good.
I'm an associate member of Chartered Institute of Personnel Management Nigeria.
Oh, wow.
Also an associate member of the Human Resource Certification Institute in the US. So,
wow.
At least I have some kind of little knowledge here and there. And I'm glad that you considered me someone that you could bring to this kind of platform.
Abdullahi, I would like to know about you and our audience as well.
My name is Abdullahi Adekanbi. I'm a cool guy, but I work with my insurance company for I have a 4 years experience in this industry. I probably worked with Cornerstone Insurance, and I currently work with NCI Insurance. Okay. I have experience in audit and control. Okay. Although I'm a student member of CIN too, although I've completed the exam, just waiting for the normal 5 years to be an associate.
Okay.
Yeah.
Then I'm also a student member of WAICA.
Congratulations in advance.
That's appropriate.
Not to be like you when I grow up.
Okay, all right. So we would like to, because of our time, and I do understand that you might obviously have some other things that you're doing as well. So we just like to, review some of the happenings in the insurance industry. And I would like to start with WAICA Re. So it says here that WAICA Re, we'll be reviewing the business day report. So just highlights about what exactly is going on in the industry. So WAICA Re grows premium by 21% to $70 million. What, in your own opinion, what do you think this is for the insurance industry? I'll go first with Abdullahi.
An increase in premium for an insurance company or every insurance company reflects a penetration. It can reflect two things, either more penetration or increase in premium. We all know that for this industry, the rating has actually been very, very low compared to the standard ratings. But over time, people are beginning to understand the fact that you have to rate well to be able to pay claims. And if you have an increase in premium, it's either they've been an improvement in the rating or they've been an improvement in the penetration in the industry of insurance to the population. Because more businesses are going retail now, some companies have a lot of retail businesses, and having more risk means that you have to also reinsure. So for WAICA Re to have more premium means they have more businesses from their seeding companies, which is the insurance companies.
Sean, what do you think about this? Do you think this is the actual position in the market, or what exactly would be your own opinion? Tamola, you as well.
So what I see here is that this the increase in premium for WAICA Re shows that it shows the reaction of insurance companies, especially in this period. I feel it's a reaction. For instance, what I mean is, the job of reinsurance basically is to kind of carry risk for insurance companies, basically. Now, a lot of insurance companies are beginning to see the need to cede their risks, especially even the need to cede more risk to reinsurance, especially in a period like this. So you find, especially in some the period like this, you notice claims have risen, and most insurance companies are trying their best to as much as take away majority of that risk from themselves and transfer it to the reinsurance. In this case, this period is more like they are gaining right now, because we might not say, but at least in terms of increase in businesses, the reaction in the market has caused them to benefit in terms of the premium increase. So everybody is afraid, I want to reduce my liability to the barest minimum. So I'm willing to cede more risk to the reinsurance at this time and then carry lesser of my risk. So a lot of insurance companies when you increase what you are ceding to the reinsurance company, automatically you are paying more premium. So that's what I see. So I see that change. I see that reaction to what is going on right now. And insurance companies say, no, let's cede more of the risk and let's try as much as possible to manage our portfolio so we don't go down in a period like this.
Looking at that report, right, I hear what you guys have said, and my point or question now is, these are 2019 figures, right? And 2020 has started, the way it is with the pandemic, and like you mentioned, a lot of insurance companies will be looking to cede more businesses to reinsurance, and like Abdullahi mentioned, people going towards retail now, and all of those things would contribute to reinsurance seeing more businesses now. I know that, for example, the pandemic situation now is really rejigging how we do our business, right? So what role do you think reinsurance would play in really enabling insurers to digitize their processes, to provide more innovative products? Because I think that with the pandemic, we cannot continue the way we used to do.
Hey, this is Brian Falchuk from Boston, Massachusetts in the United States of America. I want to give a shout out to the InsurTech Business Series, Falumi and Damola. What you are doing to help move the industry forward in the African continent, but also more broadly for the industry at large, is so incredibly important. As I think about the future of our industry, it's conversations like the ones you're having that will help us move forward. So congratulations on the success of the show. Please keep at it.
This pandemic period this year particularly, has been a tough year for the industry. First of all was the backlash in investments, because most of the companies have always gone back to investment income when the whole underwriting profit or loss has backed in on them. So I see this year as a kind of a year where we need to do things differently in terms of our underwriting. Now, the rate until Nikon came with the 6 per mil for group life at a point. This group life was basically almost free for some companies because we compete with different ratings and other things. Now, this is a year we need to start rating insurance as insurance, not just as for us to just get the premium. We need to start rating appropriately, because the pandemic seems like it's a bit relaxed now, but it's still the COVID-19 is still occurring. We have seen some deaths, and very soon we'll start seeing those claims coming to our companies as either group life claim or individual life claim. I'm very sure if, quote and unquote, a portion of those people that have lost their life to the pandemic will actually come to claim, that through their company's group life or in one way or the other.
Exactly.
So we need the insurance needs to help us in kind of being the technical parts. They need to stand their ground on these rates. If reinsurance is saying we need to rate better, I'm very sure the insurance company will too rate better, because they know that once they can't see anybody to give the risk to or reinsure the risk with, they will always do better at the underwriting. So it's best for the insurance company to stand their ground now, enforce better rating, enforce better underwriting, not just rating alone. Underwriting goes beyond just getting a document. Let's make it more scientific. Not just pay premium, submit document, and after 3 months you come and file for claim. No, let's just make it more scientific. Let this rating become more scientific. Let's take part in the new technical insurance, not just doing documentation. And so, because it seems the pandemic is a bit relaxed, but the numbers are increasing every day. So we have to just be careful, because once the numbers are increasing, the proportion of death claim will also be increasing. And in this year, some companies will pay enough death claim than they are even imagine they will pay throughout the whole year. We are just in the middle of the year. So they need to help us in terms of the underwriting, the rates, standard rating, and trades for our staffs too.
Okay. So this plays very much into the court for Sheun now. For example, you work with underwriting, and definitely you work around with ratings and stuff like that. So I hear what Abdullahi has said, right? So my question for you now is, so okay, so first thing is, why have you struggled with the whole rating thing, for so long, and how important is it now for us to actually go back and actually rate correctly?
Okay, thank you very much. Basically, rating has been a big issue in the insurance industry, right, in Nigeria, because it's not everywhere in the world. I think it's peculiar to Nigeria.
Okay.
Because when you hear of insurance ratings and the way underwriting is done in other clients, you see that there's a lot that goes into underwriting. You look at the risk you are carrying, and then you try to rate appropriately in accordance with that risk you are about to take in. Okay. There's a process to it. For instance, in the US, you can't just wake up and say, I want to take a comprehensive insurance, for instance, and then you just walk into an insurance company and then they tell you, okay, we are rating you 2%. The same. No, there are certain things. There are certain criteria that determine your rate. They look at your age. They look at your driving experience. And all these things come together to factor in your rate. And you discover that the way those things are here in theory, but we don't practice it. And this is because of the high and unhealthy competition in the insurance industry in Nigeria. Now, what do I mean by unhealthy competition? Majority of insurance companies are just looking to outdo the other. You have everybody trying to price at the lowest, give the lowest rate just to get a business, especially when the premium looks juicy. Wow, this premium is big. Let's collect it. Let's take it from these guys, But nobody's looking at the impact of the risk. In the event of a claim, you discover that you are actually not making anything from the business. But a lot of insurance companies, they take businesses by faith. Well, let's just take it. The business is big. The premium is high. We can drop rate. So it's now a rate battle in Nigeria. That's one thing that has made it difficult to do correct underwriting. And we thank God for NICOM, like Abdullahi pointed out, that said, okay, let them create a bar. You can't pay 6 per mil for group life, for instance. And then you discover that, yes, we can't go below 6 per mil. And then some insurance companies start trying to, encourage brokers to go through backdoor and try and get some discounts. And, it's a systemic issue. It's a systemic issue. Even the government itself, it's a total systemic failure in terms of that. Nobody is keeping true even to that 6 per mil. And everybody trying to outwit each other. You have riders now on these policies that they will attach riders to the group life and want to probably give it out for free. Not until the NIA has to reach a decision recently that no riders should be given out for free. At least something must be charged. And then you're having a situation where some insurance companies are charging as low as 15 naira on some riders, which is basically nothing. So the price competition, the unhealthy competition has made it difficult to rate appropriately. So when the broker brings businesses to 5 insurance companies to quote, and then you are taking yourself as the underwriter that can do correct underwriting, and you're probably quoting what you think should be the break even at worst. Somebody is quoting, giving at practically free the price. When you lose 1, lose 2, lose 3, your management is going to come to you and say, Oga, are you sure you know what you are doing? You better follow the trend. So that's what's going on. So so until that is fixed, we may find it it will take a very long time for us to be able to come together as an industry and say, and begin to rate appropriately. COVID-19's impact, we had a situation when the pandemic started. One of our reinsurers immediately sent out a circular saying that we should stop we should quickly most insurance companies try to quickly create a clause around pandemic. Trying to prevent anybody from claiming on it. As a result. Yeah. Yes, but after much deliberation, that has been taken away for now. So some companies they can actually make those claims. But it goes back to tell you that if you are not rated appropriately before the pandemic, on certain, then you take the fall for it at this period. But the sad news is that insurance companies, despite taking the fall over the years, still don't learn their lesson. A couple of insurance companies have gone underground because of this, but it's still a problem. The prayer, like most people have been saying, is that okay, let it keep happening. Those who are doing the right thing will finally survive, and then we'll have an industry with only those people that are actually doing appropriate rating. And so that's what everyone is waiting for right now. So I hope that will happen. And then, let's see what goes on from there.
All right. Thank you.
All right. So, I've heard you guys, and I couldn't help but notice that, speaking about rating, speaking about reinsurance, speaking about NIA as well. So, interestingly, the next, I'm speaking about rating and the pandemic as well. The next, report we're going to be reviewing is Nigerian Liability Insurance for considering a new market. Now, the new market that they're considering is in terms of insuring the pandemic, as well as ensuring cyber security. Now, we've mentioned pricing, and then we've mentioned rating as well. And then we mentioned, the fact that reinsurance has, uplifted the cost of reinsuring COVID-19. So what do you think this will do to the market? Cybersecurity is huge. Ensuring a pandemic is also very huge, judging by the way our books are. But it seems like the Nigerian Liability Insurance Pool has seen they are seeing opportunities in the market.
A good idea. I've always been of the opinion that insurance should not run away from risks. Rather, we should embrace risks. But over time, the insurance industry has have been very conservative. They don't want to take risks, and they are used to running away from risk instead of running at risk. When you see an opportunity where, we can make money from covering this risk only if we rate appropriately. And I think the reason why that has been over time, why most insurance companies in Nigeria try to run away from risk instead of accepting new risk, it has always been because of this problem of providing adequate rating. In Nigeria, we've just been doing textbook insurance. 6 per mil, 6 per mil, 6 per mil, 6 per mil. 100 years old, 6 per mil. 50 years old, 6 per mil. 2 years old, 6 per mil. Just follow, so that you get the business. So because of that mentality, you are afraid of rating. You are not thinking like a risk person anymore. Because as a risk person, you are thinking, I can take that risk. If I can get the right rate that will make me break even, and this person is willing to pay for it, I can take that risk. And that's what you have abroad. You have cases of footballers, yet they are insuring somebody's leg for millions of dollars.
Yes.
They are insuring somebody's... Exactly. So you see those are risks that people, it was even recently that it even came up again that pandemic insurance was already in existence abroad, where Wimbledon claimed over how many years those guys would have been paying premium before they finally got to claim this time. They never knew they would have actually been. They were just, but an insurance company took that risk and has made a lot of money over time from that risk already. Even so, now I'm sure this claim they are even paying is just a fraction of whatever they had made over time from Wimbledon or on the pandemic insurance. So the pandemic insurance is not new, but the question is, are we ready to rate appropriately? We're not going to take a pandemic insurance policy now, and then one broker comes and says, okay, I'm sharing this thing now, we're going to rate. NICOM is not going to likely regulate pandemic insurance.
Yes.
That. So now every insurance company has freedom to rate accordingly. So that's going to be a challenge. Many insurance companies, because you are not sure what your next person is going to do. Some people might be rating 0.0000, which was the case during group life before pandemic. Their rates as bad as 0.00001 something per mil, and it's terrible. So you might be having things like that, because every other insurance risk that is not under mandatory rating, you discover that they are rated ridiculously low. Let me give an example. I had an opportunity I met a client for a car insurance cover, and I told the man, I said, okay, look, standard comprehensive cover should be at least 5%. But because of competition, companies are doing 3%, companies are doing 2.5%. And I told this guy, I said, okay, look, I've spoken with my underwriters, and I think I can get you 3%. I think plus excess. And the guy tells me, Well, I have somebody else in another insurance company and he said to give me 1.5. I said, sir, with excess? He said, yes.
Wow.
I said, okay, with excess. I think it was me, yeah, because I was ready. I had to go and fight, and I was able to get him. I said, okay, I can give you 2.5, sir, because the value of your car is good. I can give you 2.5, and you have good history from what you told me. I said, and when I doubted him, he was chatting with the person from the other insurance company in my presence, and he gave me the mail the person sent to me, and I looked at it. I said, let me see it. I'm sure, sir, you don't understand. The person is saying something else to you. And I took it and I read plus excess. I think it was 1.5 or 2% plus excess for a comprehensive insurance of an SUV. And you're wondering, that's basically like nothing. A claim now and it wipes off whatever premium you have collected.
Yeah.
So that's what we are having in the insurance. Yeah. So now you are doing you don't want to go into a pandemic insurance pool. Fine. But what happens? Are we going to rate appropriately? That's the issue. And if you don't rate appropriately for something like a pandemic that can wipe out, we all see the figures of COVID-19 right now. It's crazy. Even if it can wipe out thousands, and then one or two insurance companies can be, these multiple casualties. It can be a catastrophe kind of claim. It can be, and if that happens, how do you cover appropriately? I just hope we know what we are doing and we agree to do the right thing, so we don't run all the insurance companies down with it. If we are going to do a pandemic cover, fine, but let's do it right. That's what I feel. Let's do it right.
Okay, and Abdullahi?
On the pandemic and the cyber security insurance, with the insurance company willing to do it, yes. Will they do it right? Maybe. Do they have the technical stuff to do it? I'm not sure. Even in this country, a pandemic, yes, we may be able to do it because it's just insuring a pandemic. But I know you have another pandemic till, like, let's say, another 100 years time. But for the cyber security, we need a lot of technical expertise there. And we have that in this country, yes. But are we willing to go that route the way we do our underwriting here? I don't think so. Because
sorry, but it's a risk that actually even faces insurance companies themselves. The cyber risk is something that affects a lot of businesses, and the truth of the matter is that if you now look at the market today, now you are seeing that, for example, now the government itself in Nigeria is pushing towards agri business and also SMEs now, and SMEs are part of the largest contributor to the country's revenues, right? And some of these cybersecurity threats are things that they struggle with. Is that not enough opportunity for insurance companies to yes, we don't have the technical expertise on cybersecurity and all those things. Why not we partner with people who have those expertise and bring that knowledge into how we provide some of these products?
I agree with you. We need the technical expertise, and I agree with you. It is a good area for us to tap in. But my concern is, if we are going to do it right, are the customers willing to pay the right premium? If I want to do it right as company A, and I want to do everything right, am I looking at a rate of, let's say, 10%, or let's say 10% of the sum value you want to insure, and the company is willing to do it for 1%? So are you telling me I'll be willing to do it right as the company, or as a customer, I'm willing to pay the right price? So it's just my own personal concern for the cyber security, because cyber security, you need expertise, you need data. We have those data, but can we analyze those data in this country? Yes, but are we willing to? I'm not too sure. You can say a website is down due to maybe a cyber hack. We have experts to prove that this cyber is hacked. But are we sure it's not the owner of the site that is bringing down the site just to claim? So there are many issues we need to address. Cyber security is very technical. It goes beyond just hacking, firewalls and everything. There's a lot of things that has to go into come in place. Are we willing to do that in this country? I'm not sure. Are the customers willing to pay the right price? I'm not too sure. Are the insurance company willing to do the right thing? That's not something that is certain. For the pandemic, it's good. We can insure pandemics. But most of us, we still have to go back to doing insurance because we don't be able to pay up to as much as possible that we have. Most businesses will eventually make loss this year, and their business interruption can cover the loss because pandemic actually the main focus of their business is excluded. So it's not even the main cause of their business interruption. So we need to look at it very well, and we don't just rush into it. We need to take up and see if this thing is actually it's possible. We can't do it, but are the customer willing to pay the price? That is it. Even the normal non-compulsory insurance that we do, are we charging the right rates? Because of those are compulsory now that the government through NICOM is setting a standard or a minimum rate. Those that they don't have a minimum rate, people do it as much as they want to do. Like motor now, people do it as much as they want to do. Sean mentioned it. Who do 1% for a car? You know that third party is the compulsory 5,000. So we can even do it for 1,000 for you if it's possible. So it's at the industry itself, are we willing? NIA will say, okay, they will all go to NIA and agree this. At the end, a member of the same NIA will still go back and do something else. Can NIA enforce their member to do those things? No. We need to get it right, because if we don't get it right, we get ourselves burnt.
Hi everybody, my name is Bente and I'm the founder and CEO of MTech, and we are based in Kenya. I am very passionate about the disruption of the insurtech space, and together with our model MTech, we are actually serving insurance platform and also white label solutions for the industry. Please keep on listening to Insurtech Business Series podcast, and I hope to see all of you at the conference in December.
Talking about NIA, so we have an headline that says that they've appointed a new chairman who happens to even be the current group managing director of Cornerstone Insurance PLC. What do you think that Ganiyu Musa, who is the current chairman, would do differently in terms of? You mentioned NIA enforcing some of these, rules and regulations on their member companies. What do you think that Ganiyu Musa would likely do in terms of moving that particular association forward?
I've worked with Cornerstone for like 3 years plus, and I've worked with Ganiyu Musa a few periods, and I know he's a very intelligent and smart individual. He's a seasoned professional and someone that has a lot of experience. For NIA goes beyond the chairman. It has to do with the members, the commitment of its members. It's not just being a member, the commitment of the members. The members need to not do the talking, like not just talk the talk, walk the talk. Like when you agree on something, let it be the agreement. We've seen businesses where they will go to NIA and agree that, okay, these businesses will have to jack up the rate because of the loss ratio. And still a member of NIA will still go back and cut down this current rates that is even giving a bad loss ratio. So it has to do with a lot of commitment. NIA is an association of insurers. There's no compulsion in it. So people are just members just to be members. They're not really members with, and if NICOM says this is the minimum rate, when you do it, is that a fine or there's something else you are going to, there is a sanction for it. But if there is no sanction as a member of your association, when you agree on something and you go back to do the opposite, that should be one of the things they should put in place at NIA. They should be able to do things in a way that at least when a member go against their desired the agreed agreement, there should be a kind of a sanction to that.
The reason why I asked for chairman is because, okay, so you know that most times when we always talk about risk management, we see it has to be a tone from the top. right? I mean, if I'm able to drive those sanctions, those regulations, if I'm able to drive those changes in the industry, it has to come from a top person. Like most times people will say we need to speak to the chairman to hear what he has to say. This is apart from the DG. Even the DG will probably would answer to the chairman, and that was probably where I brought the chairman in. But like you rightly said, yes, it is beyond the chairman. It is more of the member.
The commitment.
Thank you, Abdullahi. Damola, Seun, do you have contributions?
Abdullahi really said a few things that, I mean, I was just shaking my head as, okay, that's the truth, right? There are a lot of things that NIA can do, right, in terms of moving the industry forward. They are perfectly placed to move the industry forward. And the truth is, there has to be a buy-in by all members of the association to achieving set goals. So yes, now we have a new man at the helm. So we know that the previous person, Tope Smart, during his time, that we saw the Ask NID, the plans for the insurance awareness. I don't know. Yes. That started off, and then that died down after some time again. We've now heard about. We heard that insurance companies, members would contribute, and there will be a general, awareness around the country so that people know about insurance and stuff like that. That's we have not seen so much about, So maybe Seun, maybe you can share your thoughts as regards what else you'd expect from the new man, and where NIA could really play a huge role.
Now, I've worked with Ganil now for is my GMD, and I've had to hear him speak, and we are directly under him, and we've seen what a man like Ganil stands for. Over time, even before Ganil became president of the NIA, I think it was the secretary. And in the course of that period, you notice how for us in Cornerstone, we were always complying with whatever was agreed in NIA. So that shows commitment that he had always had to that organization. So regardless of whether other companies, in fact, there's a word most brokers used to say then to Cornerstone. At Cornerstone, you have eaten a lot. Because people have eaten, that's why you can be rejecting business based on certain terms. Those that are not eating, you collect it. Because there are values beyond things, there should be values that you stand for. And if there's anything I know Ganil Musa stands for certain values. And one of such values is strict adherence to whatever has been agreed as a body. NIA. When the NIA, for instance, agreed that there must be no rider that is free. Because like I mentioned earlier, the company started trying to give out free riders. To put a group like make out funeral expenses free and all those things. There's an agreement in NIA that it should not happen. And Cornerstone stood its ground all through that period. And that was because of the influence of Ganil Musa. Now, that is a value thing. For those that have gone through Cornerstone, will see that it's a value, that's always been a value issue for someone like Ganil Musa. What do you stand for? Now, knowing what he stands for and the kind of his thought process over time, you will know that he's somebody who has the resolve to go there and try as much as possible to ensure that all members have that general agreement. Now, one of the weaknesses of the NIA I've observed is that when they say where there is no law, there is no one else, right? Everything is right where there is no law. Now, the truth is, to what extent can NIA enforce anything on any insurance company? if the worst they can do is to say they will fine you as a member, and then okay, you don't pay the fine. They say okay, you are no more a member of NIA. Oh fine, but if I am no longer a member of NIA, does it stop me from getting insurance business? No. Does it prevent me from having my operating license? No. Because that's why you will see insurance. You know, they said you must. How do they say that in government? Like, you must be backed by a sanction. That there must be a force. That sanction force that says, okay, if you are unable, if you do not abide by these things, I have the capacity and authority to do something that could adversely affect you. And the question is, does NIA have that power? No. Because NICOM is the only regulatory body for insurance in Nigeria that is capable of revoking your license and saying you can't practice. And so people will bow under NICOM's legislation than under the NIA. So under the NIA, the NIA center is weak. The components are more powerful, which is why I think Abdullahi stressed the fact that it is beyond the chairman. It is the ability of everyone, each individual member, coming together with the agreement that take it or leave it. We will stand by this principle, whether we lose the business or we get it. You know, but that stiffness of competition among the insurance companies would not allow that to happen, because there's this silent beef. Let me use that word, silent beef, because you discover we not only fight with rates, but we hold information from each other. It also makes it difficult to get accurate data for certain things that you need. For instance, now, certain times you may never even be able to know the claim history of somebody who is coming into your own books, because you cannot go and ask another fellow insurer, like, oh, this guy, we heard he was under your books. How was the claim? What was the claim history during that period? Because somebody does not want to release information, or because somebody is afraid of the business being stolen away from them. Oh, you can't ask your fellow insurer, guy, what rate did you use? How did you rate for this quote? Because you can't even trust the information they will give you. They can tell you, I rated at 8 per mil on this policy. So you say, oh, if this person rated 8, I will rate 8. You rate 8, and then you hear that person got the business, and then you ask what the person rated at 6, and you are wondering, like, but we are supposed to trust each other. So, as long as there's that that lack of trust and that competition amongst members of NIA, it will be difficult, because NIA does not have the power to stop anybody from business. The Cornerstone today is no longer a member of the NIA. It does not stop Cornerstone from operating. It doesn't stop Cornerstone from getting businesses, as long as Cornerstone is still working well within the EMS and the of NICOM regulation. So that's a big issue. But I see Ganiu Musta as one who is politically sound. You know, NIA is a political body, like it or not. So I feel he may be able to convince his fellow MDs, you know, and try and. But I see him as somebody who is able to play that kind of politics, and he might just be able to play it so well that they may get other insurance companies to buy in and probably reach a kind of agreement that allows everybody to benefit. There must be something as an insurance company that will make me not want to lose membership of NIA.
Yes.
So they're able to get that. So if Ganiu Musa can come up with something like that, oh, being a member of the NIA, you know, I don't want to, there must be something I don't want to lose as an insurance company. It is that thing that will now make NIA be able to say, we sanction you for going against our agreement, and somebody will say, oh, I don't want NIA sanction, no. Let me do what I'm supposed to, because I don't want to lose this benefit that I'm benefiting from the NIA. So I think as at now, NIA has not been able to get that particular benefit that says, oh, I'm a member of NIA and that is why I am benefiting this as an insurance company and I cannot afford to lose this. But if Gani Musa can find that thing that makes you want to stay in the NIA as a member and be subject to sanctions, that is only when the sanctions will work. The only reason why anybody is obeying NICOM regulation is because you know that NICOM can revoke your license. Nothing more. Not because they like to follow rules or because they love NICOM. So that's just it. If Gani Musa can find that connecting factor that will keep everybody wanting to be a member of NIA, that is when sanctions will apply and sanctions will work. That is when NIA can agree on something and then everybody will follow. It's a Nigerian factor. And Abdullahi mentioned something about consumers being willing to pay for certain kinds of insurance, especially like the cyber security. The truth is that Nigerian factor, we have fake third party, and your FRSC guy doesn't even know how to even check sometimes. We have fake marine insurance, fake third party. Now you buy a car, you take it to the local government guy, he gives you an insurance, he does everything together for you for 5,000 naira, including insurance, and the insurance third party. You have a third party insurance, you go on the road, you show them your fake third party insurance. You don't even know you can even claim on it. So you don't see the value or the essence to have the insurance in the first place. So it all boils down to the society at large at the end of the day. You know, abroad they pay so much for insurance. But here, we are not willing to pay because we have an alternative, which is the fake one, of course, and then nobody is sanctioning for the fake one. So it's a broader thing. It's economic, it's political. I wish Mr. Gani well, though. I wish him well, really.
I mean, we all do. We expect nothing but the best.
Okay, yeah. So we'll briefly talk about recapitalization, right? Is the buzzword around the industry at the moment.
That's the front burner, especially with the whole COVID-19 pandemic. Like, how exactly will it affect recapitalization in the long run?
Definitely moving the deadline forward, yes. But what's the outlook in terms of the insurance industry? What are you seeing that could be the situation come 2021? Sheung?
First of all, let's just say thank God for COVID a little bit. At least it enables some insurance companies to buy time, even though we don't know how much able to how impactful that, how advantageous that will be. Basically, the capitalization is good. You have insurance companies that are stronger to handle claims. But where I've always had issues with this NICOM's ideology of recapitalization is I'd always felt that it should be more of a risk-based recapitalization than financial-based, because anybody can quote.
But it was risk-based, and they, most insurance companies were the ones that probably went to sue NICOM, saying that the timeline was small, and the fear of being segmented in tier-based didn't make any sense, as most of them might lose businesses to their competitors. So, are we going to blame NICOM again?
No, the tier-based system was still not risk-based. It was based on your capital. It was based on capital base, just as it is now. Just that then, depending on your capital level, they rate you, they break you into tiers. Unlike now that it's okay, everybody recapitalize. If you are doing this business, if you don't meet up with this, you cannot handle this. Then they were ready to okay, we put you on tier 1, you are on tier 2, based on your current capital base, which is more like your assets, your investment portfolio, what you have as a company. So for instance, now, if I have assets worth 2 billion, I will add it to my total premium, my rights on a day. So it's more about how much you have, just like we have for the banks. But for insurance, it's typically different, where it is the capacity of an insurance company to hold risk that should be monitored. As far as I'm concerned, not the amount of assets it has, because one claim can wipe out that asset. One claim that is not properly what's the word now? That is not properly rated or properly reinsured. You've heard situation of insurance companies that have been wiped off by one single aviation claim because they refuse to reinsure it. So all the 2 billion or 8 billion or 10 billion can be wiped out by a single claim, and there will be no money to pay if reinsurance is bad. So I felt NICOM would focus more on the risk capacity of each insurance company rather than the capital base of the insurance company. That's my own issue with that. But otherwise, well, they decided how they want to do it. And I know by September 20, a lot of companies have already started meeting the necessary criteria already, even before the end of the year. So this may just allow a lot of companies to take their time a little more. And for those that had not already met up now, they'll just quickly finalize their mergers, their acquisitions, and their sale of shares and all that to meet up with. So I think do or die, there'll still be that significant, a little difference than what we have currently. And maybe that will prompt people into trying to rate better to get better premium and have more money in their coffers.
All right. So, Abdullahi, I mean, what do you have to say as regards, recapitalization, or in terms of now, you're pumping in more money, yes, but then those investors will be asking for returns, right? So how easy is it going to be for insurers, even as we are recapitalizing?
Even before the pandemic, it's going to be a very difficult year for insurance companies, because like I said earlier, most of them still depend on investment income to make a bottom line profit. So it's not with the CBN regulation this year, most investment the rate has crashed and every other thing, even before the pandemic. So coming to the fact that you are looking for more money, it won't be easy, because insurance is not a business that turns out more turnover in terms of profit compared to other forms of investment that are outside. For investors, banks chunk out a lot of returns. You can see that from the FBN holdings reason to take off the insurance from their portfolio. They are one of their, and so they put it to Salam. So it's really a big decision for insurance company. Now, first, like Sean said, it should have been a risk-based capitalization, not even the tier that was introduced initially and this current one. Although this current one is a bit fine, at least most companies will meet it up. They are even working towards meeting it up. Some possible there might be some possible merger. It's not too late to say that. And let's just hope this. Although there's still a target for this year, and most of them might meet the target for this year, but the ultimate target is still next year, September, and still a long while. The business banks back by the end of the year. These people might spring up more money by the end of next year, and we will have a new capital base for most of the companies. But the fact is that we can't continue to do business the same way we are doing business to have that same capital base. We have to, because new investors that will come in will be willing to get a return on their investment, because these days now, you can't afford to keep your investment for too long. You need investment that will turn out profitable in the shortest period of time. And the insurance doesn't really look so, because of our expenses and our claims, another cost that we incur. So I feel for the risk-based, we still go back to the risk-based, because the risk-based is still the best. Not the risk-based introduced initially. Like you said, a company that has a capital or an asset of 7 billion, NICOM should say, okay, the maximum sum insured you can have for any policy should be, let's say, 2 billion. So you get that when you even bring in a business of 7 billion, you know regularly that you have to, what you can retain maximum is 2 billion. So either you fuck it out, either you give it to other people as co-insurance. So in that way, the one that they introduced initially was going to demarket some companies, which was not good business wise. So they would have brought in individual company who have their own limits. It might just be the companies, it might just be Nikon and the company that will understand that limit. Everybody at the end of the year will have their own limits. So it will be between the company and Nikon. So if someone that has 30 billion, might tell him to put his limit as 5 billion. But someone that has 3 billion can say, okay, your limit for any submission should be not more than 2 billion. So in that way, when there's even a claim, you know that at least you can sustain the company and still pay those claims. So it's just that's what true risk base is, not the one of tier 1, tier 2, can't do this business, can't do this business. So even as we are today, there are some insurance companies do some business they can't even take. They end up taking it abroad. Special risk and aviation. So so why not let everybody do the business they can do? Just within yourself and the company, you know this is the limits they can go. So in that way, when there's any issue, you know how to go around this with the company. So it should be a more of a risk based, not even or let's say the one they're introducing now is favorable for most of the companies, but it's still not what we need because people will still collect businesses and they will fail to insure or fail to fuck it out because they think the claim will not occur.
Guys, thank you very much for your time. I mean, it's been wonderful having you guys on our podcast. Thank you so much. Abdullahi, you've really done well, and same as Oluwaseun. Thank you very much, guys.
Thank you.
Yeah, thank you very much.
Thank you very much for having us. Thank you so much.
All right, welcome back to our podcast. We hope that you enjoyed the conversation with, of course, myself, Damola, Abdullahi, and Oluwaseun. I really want to appreciate you guys for coming on, to the podcast, even with the short notice. Thank you very much. So, what were your take home, Damola?
One thing that you can see for sure is that the younger generation is very much interested in how well the industry is going to grow, right? And we really want to get more involved. And the truth of the matter as well is that the way it is now is not favorable, right? That things have to change. Things have to be improved upon. There are a lot of stakeholders that we talked about it during the conversation who need to come to the table and actually stand up and do something. The insurers, NIA, the regulator, So there are a lot of things that need to be straightened out. And the reason why we put up this podcast is to encourage some of these conversations. So we are happy to be a part of all these conversations, and we definitely will continue to do that.
What even stood out for me in all of this conversation was the whole rating thing. If at all we're going to be penetrating new markets, if we're going to be looking at other aspects of the business, then if we don't get the rate right, like they both said, that I don't think there's a need for us to penetrate those markets. We can't keep cutting rates the way we do it for other insurance businesses and expecting different results when we're penetrating new markets with that same mentality or the same. So I think for me that was even what stood out in all of these things.
It's not realistic, really. It's not realistic because it tells in the future. You might not be people might not be making claims now, but 5 years, 10 years down there, look at the example of Wimbledon. This year they're making a claim. Look at that, So you're collecting premium now to make claim payments in the future, and that could be a huge claim, right? So it's important that we have that understanding. And one thing that I think was Seamus that said, because of the way the rating things has been, it's easy for us to not see ourselves as risk managers anymore. It's more like, let's just do better than the other insurance company.
again, it was really a good conversation to have, especially as I mentioned earlier, from fresh perspective. You're looking at people that are in the industry now that are, like we will say, the youth are the future of either anything, either the country or legacies and all of that.
Yeah.
But yes, it's just good that we've had this conversation with these young veterans in the industry and how they perceive the industry so far, which I think it's a good one.
So part of the things that we are encouraging is constant development of insurance professionals, right? And the FinTech NGR, that's the FinTech Association of Nigeria, has put together a training session for insurance professionals, right? And it's like we said, we really encourage that people begin to reskill, upskill, learn, unlearn, and relearn. It's a daily thing. Things have changed. We're talking about digitization and this and that, enabling emerging technologies. You have to learn about some of these technologies and see how they can help you do your job better. They're not going to take away your job, but they're going to help you to do your job better. So we're encouraging you to be a part of that. If you want more information about the program or getting to be a part of it, you can go on to our LinkedIn page. That's InsurTech Business Series. That's our LinkedIn page, and then check out the information there. And on Twitter as well, at Insure365. All right. Thank you very much. We really enjoyed that session today, and I hope you did. So take care and have a lovely week.
Bye.